There's a two style of investing. There is complicated way and there's a simple way. The way I like to go and the way most sophisticated, the most successful investor have chose is the simple way. This is Money Mind channel. On this channel, I talk about investing, money saving tips, and anything financial. So the goal here is trying to teach as many people about finance so we can all achieve that financial freedom, right? So today I'm gonna dive a little bit deeper on a Vanguard Total World Stock ETF. So on overview, we'll see product summary, right? We'll see price and yield, risk potential, performance of the fund, hypothetical growth. We'll see portfolio composition, characteristics, and 10 largest holdings. Yeah, when it comes to risk, actually, you can see here it's ranked between 1 to 5. It says it's 4 because this is the all stock, right? So it's 100% equity. There's no bonds, there's no real estate. Well, there is a little bit of real estate, but most of it is just actually pure stock. So it's going to be more volatile, right? And this is global fund or global ETF. So let's see here what VT it is. So VT actually in short is Vanguard Total World Stock ETF. So it does invest in both foreign, as you can see here, and the US, and we'll see what percentage of each it is. It seeks to track performance of FTSE Global All Cap Index, which cover both well-established and still developing market. Has high potential for growth, but also high risk. Share volume, share value actually swings a lot up and down because it has US, it has international, it has third world country, it has developing country, it's all the whole world, right? So it's a different, and the fund can be affected when it comes to geographical, geopolitical, anything like that. It just is affected the movement of the stock, and is only appropriate for long-term investing, right? As you say here. So if you want to save your money for car, it's not appropriate fund to invest in, right? This is a fund to invest for your retirement for long term. So let's go to fund fact. We'll go for number one, price and performance of the fund, because when you invest your money, first of all, you don't know how much the fund has performed. And we can see here, the price actually right now is 82.57. Today is kind of flat. So 10-year performance, from 2009 to 2019, you put $10,000, you would have about 25,000. Maybe it'll be a little bit more if you account with all the dividends that you've received and reinvest those dividends. You would have a little bit more on that, right? Average annual return of this fund is about 6%, which is aligned with its benchmark, which is a FTSE 6.69. This fund has returned 6.64. So one of the most important thing to actually see is this, because whenever you invest in this ETF, which you track index, right? So you have to know, how well my ETF is aligned with its benchmark, which is tracked. Because if you're way behind, there's no point of you being in that index to begin with. So you can see here, it's really aligned to it. So it's really good. That's one thing I usually check, how much the track difference it has, right? And this is a whole bunch of accounting things, after tax return and total world return, all that. I think this is we don't have to know this thing, because unless you invest in taxable account, then you're gonna get the tax receipt that will give you all this information. But if you invest in your retirement accounting or tax sheltered accounting, you don't have to worry about these, right? Because you don't have to pay tax until you withdraw your money. We're gonna go to factor number 2 of this portfolio or this ETF. It's portfolio management. So you can see stock style. it's a large blend. I mean, you invest in a huge company, right? Biggest US and global companies, right? In France, in Europe, I mean, France, Japan, Brazil, Russia, Korea, and all those countries invest in the biggest company, So, and it's a blend because there's a two type of, there's a large, medium, small, and we have a growth, we have value. So he actually invests in the blend, meaning invest in a growth company, but also it does in value company. So value company will be like company like McDonald's, right? I mean, Walmart, Procter and Gamble. Those are more of value because they don't have much growth, but they pay dividends, which is good. Or here in Canada, I think there's a RBC and like a oil company like a Suncor, a rail company like CP Rail. Those kind of company will be more value because they just pay dividend. They have growth to them, but there is also growth company like Amazon, like Google, Netflix, AMD. Those are growth company. They have high growth, so it does invest in both company, which is pretty good. And we can see region allocation, which is in the country, 10.2% is emerging market, 18% of this fund is Europe, 12.6 is Pacific, which is Australia. Pacific will be more of Australia and Korea, South Korea. Less than half percentage is the Middle East. Majority of this fund, which is 58%, is North America. So North America will be more of, majority of it, 55% is the US, and 3% is in Canada. Number of stock, this ETF has 8,423 stocks. So that is as diversified as it can be. Because you might think, I'm investing on one ETF. But not really, because one ETF has this many stocks. So if you invest in this ETF, virtually you've bought 8,423 stocks. You can never do that with your $83, right? For your own, you can buy this many stocks. It will be insane how you can manage all this, right? But with one transaction, you'll be able to do that. So this is why I like the easy of ETF, and funds like this is global. You don't have to pick like I want to invest in China, I want to invest in South Korea, Brazil, blah blah, all of those. You don't need to do all that. So you just invest in one fund, and it has all of that. And when you come down here, we can see the top holding of this. There's Apple, Microsoft, Alphabet, which is Google, Amazon, Facebook, Berkshire Hathaway, JP Morgan Chase, Johnson & Johnson, Alibaba Group, which is Chinese companies, Visa. Those 10 holdings, 10 company, their account about 11.5% of the total net asset of this fund. And you can see the total net asset of this fund is $19 billion, right? That's a medium market cap, which is a 49, but this is like the fund total net asset, right? There's a bunch of measurement. They count how much money comes in and out. So anyways, share class total net asset is 13.5 billion. So it's a big fund. It's a huge. Let's see fee of this fund, how much fee you will be charged when you invest in this. So it's about 0.09. To put that in perspective, meaning, so let's say, for example, if you invest, as we saw in that example, let's say you invest $10,000, you would pay $9 per year. You pay only $9. So they put here difference. They show kind of difference how much you would pay if you invest the same type of fund, but you buy mutual fund, you'll be paying in 10-year time, you pay $2,479, versus if you hold this fund for 10 years, you'd only pay $219, because you have to understand is only, as I say, it will be like $9 times 10. But actually, because the fund will be growing, so this calculation will be wrong, because this fund will be growing, so that means there is as the fund grows, your $90 per year will be growing a little bit, right? So that comes to $212. I mean, it's pretty low. Distribution. So this is dividends, right? They pay this quarterly dividends. So this is like every 3 months they pay dividends. And you can see in 2019 they pay 4 times, right? So there was March 26, June 18, September 25, and December 24. And you can see 61 cents per share, 43, 55, and 28. So it can fluctuate, but it's a big, it's the 61 per share is it's a good yield, about 2%. You can see on the view how much a yield. The yield of the fund is about 2%, so aligned to S&P 500 kind of. So that's it. So if you want to invest your money, simple and easy, one fund. This is a fund to invest globally. You'd buy one, you're done. You don't have to have too much complication of this fund and that fund and that fund, as many people do. I mean, you can do that, it's fine, but if your risk tolerance is high of just all stock, no other asset classes, like a bond or maybe precious metal or like real estate and stuff like that, you just buy this one, you're done with it. Like for me, for example, my RRSP, retirement or registered retirement savings account, I invest 90%, not 90% actually, about 70% on this, just one ETF, and I call it a day. And then every time I just reinvest my dividends. So if you have any question on this fund or anything else on finance, just leave your comment. If you like this video, please like it, subscribe, and hit the bell button so you can get more notification whenever I release a new video. Thank you very much for watching. Goodbye.